Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Hey, start trading Forex indices and commodities with up to 800k of Blue Guardian's capital risk-free. Just pay a small one-time fee to take the challenge, hit a profit target and get funded. Then keep up to 90% of your profits and enjoy fast weekly payouts. Now for futures traders, Blue Guardian Futures offers up to 450k in funding with 100% profit on your first 15k. With low targets, no activation fees and unlimited resets, it's one of the best deals in the industry. Visit blueguardian.com or blueguardianfutures.com to start trading today and grab their limited time discount code.
Hey, hey, what's going on, everybody? It's Brinks Trades live with another week of breakdowns. Hope everybody's doing well. Hope everybody had a good Christmas, all that good stuff. So I wanted to come on here and just kind of do the breakdown again that I usually do on a weekly basis. Again, if you guys don't know me, I am Brinks Trades, so the resident indices and futures analyst here on the Trading Nut podcast. And so basically every week I come on here and I break down what I think is going to happen in the markets over the next week. Again, I've been doing this for about, for Trading Nut, I've been doing this for about a year and some change now, almost a year and a half, I think. And overall, I've been trading for about a decade. So over, almost 10 years, well, about 10 years of trading experience. So it's been a crazy journey up and down. Started in Forex, transitioned into futures. And I just want to impart as much knowledge as I can onto the market. So see, we got some people in the comments. Shout out to Tony. Shout out to Andrea. Shout out to JS561. Shout out to you. So what I want to do is really just go through a few of the charts for this week, but then I also want to kind of give a disclaimer that this is a different week than it usually is, right? So obviously we're in the middle of holidays. I told everybody that I personally will not be taking any trades until the beginning of the year. I do still like to stay kind of like in touch with what the market's doing, just so I'm not like, I don't have too much of like a holiday hangover, right, going into January. But as far as taking trades, I'm not really interested in taking anything, right? And just me personally, I'd rather wait till next year. Where the markets are good, there's a lot of liquidity in the markets because people are actively trading. And so right now, this is just vacation. So again, I'm using this to keep my skills sharp and make sure that everybody kind of has a good analysis going into the next week. But I would imagine the week after New Year's, so I think that's like the 5th or the 6th, that's when I probably will be back online trading again. So be looking out for that. I have a lot of announcements for my personal group or for my personal mentorship that I'm going to be kind of revamping going into next year. There's going to be a lot of new things added for them. And so if you're part of that community, you guys are in for a good luck. And then I'll also be opening the doors up for, new people to join as well. So there's going to be a lot of stuff coming next year. But I'm really looking forward to kind of like passing on a lot of knowledge and really, helping to create some new traders. So what I want to do again, if you guys know me, you know that I start with the dollar index, right? So that's going to be the first thing that I look at when I do my analysis, because again, I want to know what dollar's doing. I want to know how it's looking, and if we have a good understanding of what dollar's doing, then we can potentially get a good analysis on everything else. And so it's going to be pretty quick, today, just because, again, I'm not really actively trading, and I don't think you guys should be either, right? Again, enjoy the holidays. But coming into last week, so what we had here is, so the last few weeks we set an initial high here at 107.80, right? And so coming into the week, we've noticed that we've really taken out the highs here. So again, this was our previous target. We know the buy side is going to sit above these highs. And so the market has really run into these highs over the past couple weeks and really failed to really close above them, in a very convincing manner. So I'm looking at a few things here. I'm looking at this being the last week of the month. I want to look at the monthly candle and see where we're closing at. And so really, we have inverted fully this fair value gap here with this month. So ideally, what I'm thinking is we're probably going to continue to run higher, which is kind of in line with, all the geopolitical stuff that we're seeing right now, right? So we're hearing a lot of stuff about, fixing the economy, stronger economies, right? And so kind of lines up again with what we're seeing in the charts, having a stronger dollar. So I really don't have any reasons as to why this thing shouldn't continue to go as long as we close, above these highs or above this this fair value gap here. We also closed above consequent encroachment of this fair value gap here. Boom. Right. So it's letting us know that this, as long as we close this month out, I guess over the next few days, above this high, then it's probably going to continue to run higher. So that's a good sign. So really what I'll be targeting over the next few months is this low resistance liquidity run or this trend line liquidity. You might hear me refer to it either one of those terms, but again, this liquidity that's sitting in this range here, I think as long as we continue to stay above those highs in the monthly, then we could potentially attack that. So coming into next week, again, I'm cautious here because we have really failed to get above this high, but I like this fair value gap here, and I want to see the market potentially run into this on the weekly and find reasons for this to come in and go higher, right? So if we go down to the daily time frame on dollar, again, same thing here. We tapped into this daily fair value gap here. Again, I want to see this kind of re-enter this again, potentially to fill the weekly gap that we just saw, and then potentially go higher, right? So I will change my bias on this, at least in the short term, if we disrespect this fair value gap. So I'm just going to make a note here on this gap and say want to see fair value gap respected, right? So that's the first thing. So I want to see this gap respected for us to continue to go higher. If we invert this gap, and especially if we close below this order block, this could be a run of an old high and then break instruction and to continue to go down. So I want to see this continue to stay up and continue to find reasons to go higher. And I would say closing below this low here will kind of be our fail safe, right? So if we close below this gap and we invert that order block right there, or disrespect that order block, I'm most likely going to continue on with the bearish bias here. But ideally, until then, got to stick with the bias that we're given, right? You don't want to try and catch a falling knife. You'll lose a lot of money trying to project the reversal before it happens, right? You want to wait for it to happen and then kind of play off of it. But as of right now, we're still bullish. So if we're bullish on dollar, it means we're going to be bullish on euro futures and pound futures, right? The two main futures that I trade. I'm going to start analyzing Japanese futures as well. So that's going to be another one as well. But as of right now, let's jump over to euro futures. I'm going to look at the comment section really quickly. Can you experience the good? So, okay. So I don't trade the Malaysian. I feel like I've seen that. I feel like everybody has their own kind of version of these concepts that I teach with. I have no idea what Malaysian is though. So if you're, yeah, I have no idea what Malaysian is. I don't even want to give you bad info, but I have a feeling that it's an offshoot of smart money concepts. I can't really say that for sure, but I'm not too sure what that is, to be honest. But if it's something similar to what you're seeing me do, then it's probably an offshoot of smart money concepts. So ideally, going to euro futures again, if we're bullish on there, we want to be bearish on here, and that's kind of what we've been seeing over the past few weeks, right? So again, when we look at, get rid of this, the past few weeks on Euro futures, we've been bearish, right? We swept liquidity back into this fair value gap. We've targeted these lows down here. We've traded into this order block and kind of rejected it. This order block here sitting at like, what is it, 1.043. So we're pretty much bearish on Euro futures. And again, if you're not familiar with Euro futures, it's essentially what Euro USD is on the futures contracts. So again, if you're outside the United States, then you want to look at Euro USD, but it's essentially the same chart. So there's a few things here that I wanted to see happen. And so again, we've had these relative equal lows down here, right? So I think we're going to run back down here. And I've been calling this out for the last few weeks. Unfortunately, this happened at the end of the year, so we haven't really gotten a lot of volume yet to really kick in, and that's probably not going to happen until the beginning of next year. But we could see something happen this week. A few levels that I'm watching again are these lows and also consequent encroachment of this first wick here, which I'll draw right there. As you can see, this previous week we tapped down and hit that again. There's nothing here to make me suggest that we're going to go bullish. We're still respecting this. This is something that I want to note, that we are respecting consequent encroachment currently. But this week did give us a fair value gap, right, on the higher time frames. So ideally, what I want to see here is best case scenario, right? For bearishness, I want to see the market do this next week, trade back into that gap, and then start to attack these lows, whether it be the low of last week here or the low, these relative equal lows here. Ideally, relative equal lows will be the best. Again, we're running into a week where we're not going to have a lot of volatility, right? And if this situation plays out, I'm not going to be trading it at all, right? I'm just going to be sitting back and watching it because I got better things to do than sit in front of the charts at the end of December with low volatility. So if it happens, cool. If it doesn't, it probably will happen sometime at the beginning of next year. So ideally, what I want to do is kind of wait for that. But if I was trading this week, I'd be looking to see how these lows get taken out and how these gaps are respected. If this gets inverted, then this could be a higher play back into this volume imbalance up here at 1.054, right? So ideally, I want to see this happen though. Best case scenario, we trade back into this gap, we attack the low of last week, and then we head to these relative equal lows. And if we take out relative equal lows, if we take out the low of last week but fail to get down here, this could be a sign that the market just does not want to take out these lows just yet or at all. And so ideally, best case scenario is we're closing somewhere below this consequent encroachment. And that's going to give us kind of like the probabilities that we're going to continue to take out this low. Let me go back to comments, nothing there. So jumping down daily time frame real quickly, I just want to see what it's looking like here. Yeah, same thing here. Yeah, in this case, we have relative equal highs here. So I wouldn't be surprised if we, came back up into that range and swept these highs here back into that gap that I have noted for the weekly time frame, and then went lower. So, and again, you can see those relative equal lows pretty clearly there. It's algorithmic. We're going to definitely come back down there. Again, if it happens this week, cool. If it doesn't, then it'll probably happen, sometime that first week back at trading, which will make for a really good setup. So that's Euro futures. I think this might be the stronger of the two. Let me look at pound futures. $6B1, $6BH, cool. So again, same thing on pound futures. We're bearish, right? Except this one, we actually have a little bit of divergence because we swept this low that was set there, whereas Euro futures did not want to go down below that low. So I'll be watching a couple things. Again, we have the same setup here. Oops. Right, we're bearish. It's obvious. It's pretty obvious, right? Lower lows and lower highs. It means we're running towards some level of sell side liquidity that we haven't grabbed yet. So I'll be watching that low to that high, but I also will encompass this. So this zone right here is ideally what I think the market could potentially run back to. I also would like the market to stay below these relative equal, the consequent encroachment of that wick. So I think if we stay below that, it's just a good sign that, we're going to continue to, respect this. So again, this is weekly time frame. This one's not as clean as Euro is. So if I had to pick between the two, I would be looking at Euro futures first. Again, same idea here. Trading back into this, we have a lot of stuff in this range. We have that weekly gap that I just called out. We also have this order block right there. We have consequent encroachment. There's a daily wick, right? So there's a lot of stuff here that I think the market wants to run for or will respect if it runs for. Something like that, right? It's best case scenario. Ideally, the reason I don't like this as much as Euro is because we did take out those lows here, whereas in Euro we didn't, right? So if I had to pick one, again, it would probably be Euro futures because it's very clean, but that's what I'm looking at. So that's Euro futures. Let me look at G6J, which is yen futures. Again, yen, we just swept these lows here on the daily. Let me go back up to the weekly. Yeah, and the same thing here. So we did close below those lows. I'm looking left to see like what's here. This is the lowest we've been. Yeah. Well, I don't like that. So ideally, this is kind of like an all-time low situation here. Very similar to NASDAQ. Again, this is yen futures. 6J is going to be 6 Japanese yen, right? And 6 denotes the currency. So this is essentially going to be your Japanese futures. Ideally, that's what I want to see is the market trade back into that gap and then give us reasons to continue to go short, right? And the only thing I can target is that low. So if we don't get something very clean, this will probably just be a chart that you want to stay away from this week because we're so close to the all-time low here and we just took out the previous low. So this is something that you probably would not want to even enter in on until we come back into this range. And it gives us like a fair amount of respect that it wants to continue to go lower. But ideally, if I was going to sell somewhere, it would be somewhere in this range. Let me look at Aussie futures. Yeah, it's the same thing. We ran way below that low. God, we took that out. Yeah, I mean, on Aussie futures or Australian dollar futures, same thing here. We just took out the most recent lows. So the only thing I can really see is this low and this consequent encroachment of this wick. So I would want to see the market really run back into the range, really respect that fair value gap, and then really find its way towards this low. I don't know if we'll get that. It's a pretty decent far ways down, but it's always possible. That's all the currency features. I'm going to start incorporating a lot more of those, especially since my students, I want to really be focusing on those currencies for my students group going into next year. We'll still talk a lot about NASDAQ, but personally, I'll be doing a lot with the currency features. So let's go to NASDAQ really quickly. I know that's why everybody's here. Weekly time frame. This was our target, right? From last week. We did not get that. Again, low volatility this week because of the holiday. And so what I wanted to see here was the market really potentially invert this gap and continue to go higher. And we have gotten that so far. We're in this gap. Actually, we are not. So we've gotten this so far. So we've inverted this gap. We came back into this gap and retested it. Tried to really retest the low. And we're currently just in a range. I don't like this at all. Ideally, I want this to go higher, but we came back into this weekly fair value gap, respected it, and then started to head higher, traded back into the daily one. and that's currently where we're sitting at. So there's nothing really to do here. We wicked in both directions. We took out liquidity here. And so ideally, I want to see the market. I want to find reasons for this market to continue to go up higher, just based on the higher time frame on the weekly. Um, but really, there's nothing here. So I'm just going to tell everybody to sit and wait on this. There's nothing really to do here. But ideally, I want to see the market really continue to disrespect this gap, this SIBI here, and then find reasons to continue to go higher. So if we're going to the 15-minute time frame, again, I would want us to like invert this gap here, right? And find reasons to continue to go higher, right? So taking out old liquidity above the highs. But since that we're not really getting that right now, I can't really recommend that. So ES, same situation here. We actually broke structure. We came back, mitigated this entire gap, broke structure, and went back down. So that's not really a great one. So ideally, what I wanted to see here is this invert, and we still can do that. And right now, again, because there is no volatility, really this time of year, we might just see this range next week. But if it does, cool. If it doesn't, then again, you should not be trading this week anyway. This is like the one of the few weeks where it's like, just go do something else with your time. Like, don't be in the front of these charts like that. But ideally, what I want to see here is this invert. If we fail to respect this gap, then coming into the next week, I'll be looking to continue to short this. But ideally, I want to see this respected and continue to respect. YM, I think, let's see what happened last week. So this one's a little different. We have a clean breaker structure here. And so ideally, what I want to see is this market continue to go down. We took out these this order block here. So this is very much could be potentially a bearish setup. I would like us to really take out this low here to confirm that, though. A lot of times when there's consolidation in the range, I want to see something very clean before I really start to form my thesis on like where the market's going to go. And a lot of times if there's chop, I'll just sit out, right? I'll just wait it out until I get something really good. And this is chop. But I do see the makings of a bearish structure and us potentially disrespecting that gap by closing below this. This could easily go down as well. So I could see this as a bearish market. It really depends on how we treat this gap right here. This 4 hour or this daily fair value gap, this daily SIBI. That's at 43,815 to 43,309. If we disrespect, or if we respect this, then I'm expecting this to continue to go down, right? And so again, if I ever have to call both sides of the trade and say if this, then this, or if this, then this, that's probably not a strong scenario for me, and I don't really want to trade that to begin with. So yes, that's actually all I've got for you guys this week. So actually, that was a really quick session. So again, I'm bullish on dollars. That means I'm bearish on most of the currencies. And then I'm bullish on YM. I'm sorry. I'm kind of question mark. Ideally, I want to be bullish on the indices. But right now I'm leaning more towards a bearish bias on YM. And then I'm kind of at a toss up with both MNQ and ES. I can call bearishness. Like I can very easily see how this market can go bearish, but I also can see how this market could continue to go bullish based on the higher time frames. And so again, whenever you get that scenario, you just kind of want to sit out and just wait for more information, which is great because this should be a week you're sitting out altogether anyway. So that's all I got for you guys. I'll stay on for like a couple seconds if you guys have any questions, and then we'll go from there. I know someone always asks me to look at gold. I'm not going to look at gold today. So if that's what you want to do, then we're not going to do that. But I will answer any questions about like general trading. Okay, cool. I don't see any questions, so I hope you guys have a good rest of the weekend, good rest of the holiday break. Enjoy this time because January will be hectic again. Um, yeah, and so hopefully everybody has a good holiday, good weekend, does something fun, spend time with family, etc. So catch you guys next week, and we'll be getting ready to gear up for 2025 and the first week back trading. So peace. Have a good one.
Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Hey, start trading Forex indices and commodities with up to 800k of Blue Guardian's capital risk-free. Just pay a small one-time fee to take the challenge, hit a profit target and get funded. Then keep up to 90% of your profits and enjoy fast weekly payouts. Now for futures traders, Blue Guardian Futures offers up to 450k in funding with 100% profit on your first 15k. With low targets, no activation fees and unlimited resets, it's one of the best deals in the industry. Visit blueguardian.com or blueguardianfutures.com to start trading today and grab their limited time discount code.